LIC IPO has kept us all at the edge of our seats. The hype around it can be apprehended by assessing its market position in insurance sector. So let's take a look to know more about this. The initial public offering of Life Insurance Corporation of India has moved a step closer to reality after the insurer filed its draft paper with SEBI on 14th Feb 2022. The issue is said to dwarf the recent $2.4 billion IPO of Paytm last year. LIC was created by the merger and nationalization of 245 Indian and foreign insurer and providence societies in 1956. Now let's understand how big is LIC. LIC has been household name in India for decades now. Here are the key things you should know about the impending IPO. LIC is India's biggest life insurer with 286 million policies, 1,15,000 employees, and 1.34 million individual agents, and more than 2,000 branches. It has 64.1% market share in terms of premium and 66.2% market share in terms of new business premium. It manages $528 billion of assets, which is more than the total size of India's mutual fund industry and 3.3 times more than the total assets under management of all 23 private life insurance companies. And now coming to what is on offer. At about $130 billion, LIC's investment in listed equity represents around 4% of total market capitalization of NSE. The government, which owns 100% of LIC, is selling 316 million shares, representing 5% of its equity stake through the IPO. The issue is a 100% offer for sale means LIC will not receive any proceeds from it. 10% of the IPO size is reserved for policyholders, while employee quota has been kept 5%. LIC dominance is unparalleled globally, with no other life insurance player in any country enjoying such high market share. LIC is ranked 5th globally in terms of life insurance premium and 10th in terms of total assets. It is the only Indian player among the top global insurers. Now let's understand what will be LIC's valuation. The draft prospectus has put LIC embedded value at $71.3 billion. The embedded value is a measure of future cash flows in life insurance companies and a key financial metric for insurer. SBI Life Insurance, HDFC Life Insurance, and ICICI Prudential Life Insurance are the only listed life insurance companies in India. HDFC Life has a market cap of $15.6 billion, 4 times its embedded value, while SBI Life and ICICI Prudential Life have to market cap to embedded value ratio of 3.3 times and 2.4 times respectively. If LIC is valued at 4 times its embedded value, its market cap could be $285 million, making it India's most valuable company. At 5% stake at that valuation will fetch the government $14.25 billion. If ICICI Prudential Life's multiple is taken, LIC could be valued at $171 billion. That could make it India's 3rd biggest company by market capitalization and fetch the government nearly $8.6 billion in the IPO. Now covering Life Insurance Corporation's financials at glance. LIC reported a profit after tax of $199 million for first 6 months of financial year 2022. It collected premiums worth $24.6 billion during this period. Its gross and net non-performing asset ratios in debt portfolio stand at 6.5% and 0.05% respectively. So what are the risk factors? Well, LIC faces significant competition from private players. As a result, it has been losing market share, although it continues to be the largest life insurer. The gross written premium for LIC is increased by 6.3% in financial year 2021 compared with 24% for SBI Life and 18% for HDFC Life, with the government raising the FDI limit in insurance sector to 74% from 49% last year. There is an impending threat of foreign players entering the market and capturing market share. LIC's policies are primarily distributed through agents. In financial year 2021, individual agents were responsible for 93.8% new business premium compared to less than 30% for its private peers. Moving forward, what challenges will the government face with LIC's IPO? The IPO filing has come at a time when a sell-off has gripped the Indian markets. The benchmark Nifty 50 index is down almost 10% from record highs set in October 21. The current IPO record holder Paytm is trading 60% below its issue price to drum up market participation amid tough conditions for an IPO of its size. LIC has embarked on an advertising blitz to encourage policyholders to open demat accounts. While the IPO will be seen as a test of investors' appetite, the government is backing as the insurer's brand value, as it hopes that the market will absorb the mega issue. Able to comprehend now? For more such informative videos, stay tuned and let us know your views in the comment section.